Hi everyone and welcome to my morning report analysis videos on Wednesday 19th of September with me, Richard Perry, market analyst at Hantec Markets. Well, the glass is half full and markets are taking this current ramp up in the trade dispute as a positive. Seems as though that the moves from the US and China seem to be perhaps marginally less than anticipated. Certainly on the 10% on the $200 billion tariffs from the US and then China responding. Seems to have been taken fairly risk positively. Look at this. Pretty much across the board, the dollar is weaker and the yen is not really performing. So that sort of points out towards a positive risk appetite. Kiwi and the Aussie are both stronger. We've got equity markets positive. You had the S&P 500 strong last night into the close. We've got, let me show you, VIX volatility lower. We've got the Chinese yuan, this is interesting, strengthening. And that is all playing out into dollar, which is sort of underperforming and continuing this sort of slip towards the key support around. Well, I'm taking it as 94.08 because that was the reaction low that we had in late July, which effectively would see the market topping out if it were to be broken. So watch out for that. But certainly some key moves. Now we've seen yield differentials. Let me just show you 10-year yield back above 3%. So again, sort of reflecting this improved risk sentiment that we've got in markets. Now yield differentials are playing out in the dollar yen once more. However, not so much on euro dollar, interestingly, and also I note on sterling dollar as well. So that's an interesting sort of decoupling there. But certainly this weakening dollar is playing out through the Forex majors today. Now, we do have some data, quite a lot of data today, starting with the UK inflation at 9:30. UK inflation is expected to slip a touch on both core and headline. Core to 1.8, headline to 2.4%. So it'll be interesting to see how sterling reacts to that. Considering we had strong earnings last week, that will be, I think, an interesting reaction there. But also watch the PPI input prices, which is expected to drop back to 9.1%. Now that has the strength of sterling, or relative weakness, I suppose you could argue, has played into rising PPI prices, which feed into inflation. So the fact that PPI input prices are falling reflects the sort of improvement in the outlook for sterling, and also inflation dropping back plays into that as well. Now, after that, we've got the building permits and housing starts for the US, both expected to, well, building permits around the same level, housing starts touch higher. Crude, before that, sorry, current account, US current account is also announced at 1:30, expected to improve to 103 billion, 103.5 billion. Now, the weekly crude stocks are expected to again be in drawdown today, to minus 2.5 million barrels, and then distillates at 1.5 inventory build, and gasoline flat. So volatility on the oil price could well be seen this afternoon. Now, my chart today is the Aussie Yen. Now this is a chart that I do look at quite a lot because I think it shows risk appetite quite strongly. We can see that in the last week and a half, risk appetite has really improved. Aussie is a higher risk currency versus the very much safe haven yen. So improvements in this chart is Aussie relative to the yen stronger. So we've seen this improvement, really strong improvement, which has now broken the downtrend, a 2-month downtrend. We see momentum indicators increasingly positive, RSI mid to high 50s, MACD and stochastics accelerating higher. We've now sort of broken back through all this sort of overhead supply. We had the overhead supply of initially around 79.70, being a reaction low yesterday, closing back above 80.50, which was a strong level of overhead supply. Old support becomes new resistance. That was breached. Breaking the downtrend, we've got improvement in momentum indicators. You're breaking through resistance levels. It's increasingly positive. It looks like it's going to be returning back towards 81.80, which was this old pivot from July, August. If it breaks through that, you're looking at 82.80 as the next sorry, 82.80 as the next level of resistance. So it continues to improve, continues to pick up. Momentum is strong with this move, and it'll be interesting to see if we can see the RSI above 60, because that would certainly help to sort of generate that strong momentum needed for a breakout above 81.80. You can see on the hourly chart, you've got this higher low now at 79.70, but also you've got the breakout support around that sort of 80 spot 70 level, 80 spot 80. Initial support, again a little near-term pivot at 81 figure, but it certainly looks as though it's increasingly strong on the momentum indicators, and weakness is a chance to buy. So I wish you good luck in your trading today, and I will speak to you later.